In today's video, I am going to give you 5 really good reasons as to why the Canadian banks are a very good investment. They are almost foolproof, and they will probably never go under the way the rules and laws really state. So let's get down, let's check these out. So the first thing we are going to be looking at is mortgages. Of course, this is a very large portion of Canadian banks, and this right here is a very massive part as to why the Canadian banks are a very good investment. First off, if you put less than 20% down on your house, you're going to need to pay mortgage insurance. And why is this important? Well, guess what? That mortgage insurance is not what banks are paying, it's what you as the person who's buying the house has to pay. So you need to essentially pay insurance on a mortgage in case you default and the bank takes control of your house. That is something that just blows my mind because we have to basically pay insurance on if we are the ones who fail, not the other way around. You would automatically assume the Canadian banks would have to pay this insurance, but they just pass it on to you as the purchaser. Unless you put 20% down, which means that basically, let's say you default as an example right away. Let's say a month or two down the road, you default right away. Guess what? That house price is not going to decrease by 20%. That's almost guaranteed. And the reason behind that is because now what you're looking at is a housing market that is not looking like it's going to be correcting anytime soon. Which means that if you default right away, the bank comes out ahead because you've already put 20% down. You don't get that money back. And then if, let's say, you default and you're paying this mortgage insurance, guess what? Whatever loss is on the loan when it comes to the Canadian bank, they now profit from that to your loss. This is a lose-lose situation. And that lose-lose situation is a lose-lose on the person buying the house, while the bank has a win-win situation no matter which way they look at it. Now, of course, there are times in the Canadian economy where we have housing crashes. We had a small one in 2008, 2009. It was nowhere close to as big as it was in the States. We really only lost upwards of 10% on our housing prices, and it rebounded pretty much the next year. And when we start looking at those types of numbers on a very bad recession, you start really looking at housing as a win-win for the banks. Even if there is a housing crash, which probably doesn't look like it's going to happen at all, this is a win-win. Another reason to invest in Canadian banks is their dividend. The top 6 banks in Canada have not lowered their dividend or canceled their dividend in over 100+ years. At times, they have froze their dividend, which means that they have not been able to hike it higher. However, they are still paying the exact same amount. We recently seen this during the pandemic, where they still kept on paying their dividend, but they were not allowed to raise their dividend. And then as soon as they were allowed to raise their dividend, some of the Canadian banks like BMO raised it by 25%, which basically means anybody who was investing in BMO, let's say they were getting paid $10,000 a year before in dividends, now they're getting paid $12,500. That's a fantastic pay raise, no matter who you are. They also don't usually trade at exorbitant, crazy PE ratios. When you start looking at American banks, PE ratios could get as high as 30 in some cases, while with the Canadian banks, they generally top out at 15, and then they kind of crawl back down. And their average volume is huge, into the millions for some banks, because there's just so many people who want to invest in the banks. We have to remember that volume is important because the higher the volume, the easier it is for us to get in and out of that stock. For example, if there was only 1,000 shares being traded every single day and we wanted to buy 1,000 shares, it would probably take you a few days to make that trade. But when you're looking to maybe buy 1,000 shares and there's 1 million shares being traded on average, you're going to be able to get in and out of that extremely easily. Also, the financials. I really want to break this down. When it comes to National Bank of Canada, as an example, 2020, they made the exact same amount of money, roughly. Of course, they did have a little bit of a shortfall, but roughly the same amount. And they made lower earnings, which is no big surprise. There was actually some Canadian banks that had lower revenue and higher earnings. However, National Bank was not one of them. However, when it comes to 2021, where they made all those staffing cuts, as well as learning how to go more online and, of course, creating more options to make money, guess what? Their earnings skyrocketed to the best they've had in recent modern history. And their revenue went through the proverbial roof. And keep in mind that the fourth quarter was a miss, but they still had those blowout yearly earnings. Now, I'm going to get back to this part soon. However, when we're looking at post-pandemic drop, we've seen that all of the Canadian banks have broken out hugely to the upside. There's a few reasons because of this. Now, I will be getting to that a bit later as to why they've broken out, but it's actually a very big positive and kind of scary for the people who just don't invest as to why these banks are breaking out. However, this is a very good example as to National Bank anyways raising their dividend. They consistently raise it. Of course, they were not allowed to during that time right there. However, they do consistently raise their dividend, and if you really want to make more money over time, this is what you want to really look at when you're investing in dividend stocks. If a company's stock price continues to go up better than inflation, in my opinion, and better than interest, you're all set. However, if they're paying a dividend and they're not increasing it, that kind of gets me scared. However, if they are increasing or consistently increasing their dividend, what that tells to me is as long as that dividend increases better than inflation, as long as it's basically getting better than 2 to now 7%, then at that point, you are still making more money and you're not losing your earning power, I guess you could say. TD Bank is another powerhouse in my opinion. Yes, dividend's great. Yes, average volume is amazing. PE ratio is a bit higher than National Bank. However, watch this. This is what I was mentioning earlier. Lower revenue, but higher earnings, which then translate to next year. They're going to obviously make more revenue because this was a pandemic year. However, they learned how to cut costs, and that then translates into their earnings. Massive earnings, massive revenue growth, and that's going to most likely continue, which is why there's a lot of investors investing in banks right now. They also had a close third quarter, which roughly in a way lines up with that fourth quarter of National Bank. However, they still beat it, and of course earnings are still continuing to go higher. So notice how the increase here wasn't as drastic as National Bank. However, it still was an increase. And then since that point, they've also had a massive 25% increase since the beginning of the pandemic. Also notice that they do increase their dividend regularly as well. One way that you can play them is in something like a BMO equal weight banks, ZEB. However, I really want to show you something here, and that's actually really interesting to me anyways. And that is this prior area here and as to how to invest in the Canadian banks. You can invest in something like this. Obviously, there's an MER, and I would suggest just buying the Canadian banks separately and not doing this because you'll make more money. However, it does actually show my point of as to why you want to be selective in your picks and not just go exactly equal weight. As we can see here, there was really not any increase of stock price at all. We can see that it's gone from $27.50 until this point, which was about $30. That's about less than a 10% jump from here to here. Meanwhile, National Bank, NA, jumped from $56.50 all the way up until $73. That is a massive jump during that time. I was investing in it just before this point where it was even lower. which gives you a strategy as to how to pick Canadian banks. Not all Canadian banks are going to be equal at all times. You have to pick the ones that are not doing so well, and usually there's 2 or 3 names that are usually underperforming the average out of the 6 banks. If that is the case, those are the banks that you generally want to invest in. They'll usually have a lower PE ratio. Right now, we're kind of seeing that in Bank of Nova Scotia in a way. What you would normally do or would like to do anyways, this is how I invest in the banks, is you pick the losers of the group because in 2 or 3 years, they're going to be the winners. And then on the flip side, you'll be picking those same winners that used to be winners are now losers, and then you pick those. And I'm not talking about selling the winners. Keep the winners. You want to hold on to them for a very long time, but your new investment money, that's what you would invest in, is the losing banks, the losing big 6 banks. Because when they flip back around, because they're the big 6, they're so well protected by government regulations in Canada, as well as that mortgage type backed insurance, or insurance backed mortgage, whatever. Anyways, they're so protected that they will never go under, and they've been raising dividends for over 100 years. These are really solid investments. You just pick the losers at that time, look 2 or 3 years out, and they'll be the winners. And then your new investments that you put in, that's the losers you would put in now, and then they'll be winners in 2 or 3 years. And if you do this over a 20, 30, 40-year period, it's a very good way of investing. I hope that you've enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.